fundamental analysis is used. Today we will focus on technical. The technical traders focus on what? They study price movement. By studying it, they see what the current condition of the price is and what it will be in the future. Now, because all the decisions and movements of market movers are reflected on the charts, what does it mean? It means that everything we need to know or make decisions about is present on the chart. Why? Because there is a human concept that history keeps repeating itself. So what happened before will happen again.
In this, you can see different cycles, 50 years, 100 years, 1,000 years, 9,000 years. History will repeat itself. A civilization will be built and will collapse.
Will end. History will keep repeating itself. Similarly, on the charts, it happens that briefly the support and resistance, the price levels, the price area, where the price gets rejected, or the price will return from there, or the price will rise from there, or the price will fall from there. So now when the price comes to that place again, most probably history will repeat itself again. So technical traders use these charts. They study these charts. They trade on the future based on the patterns of these charts.
But because every trader has their own experience and understanding, if 10 people look at the same chart, they will understand 10 different things. That's why there is a difference in each person's understanding. That's why we say that you should spend as much time as possible on the chart.
You start trading. Spend time in front of the charts. Without understanding the nature of the chart, you press a trade on it. Once you press a trade, you are unable to read the chart as it is. You cannot read the chart as it is. Once you have placed the trade, your heart will say that the price should go in this direction, whether the price goes or not. Therefore, every trader sees different things by looking at the chart. So we have to sit in front of the charts to understand them. Now, tools are used to understand the charts. We call them Fibonacci. In that, we have trend lines, we have channels, we have patterns, we have support, we have resistance. All these things we have indicators. RSI, MACD, Bollinger Bands, TAC, many different things have come.
You will keep getting it. It helps in understanding charts. Secondly, we have, last but not least, sentiment analysis. What is the purpose of sentiment analysis? Now, by understanding sentiment analysis, we need to see what people are often saying. There is a fact about trading, a reality, a truth, whether we accept it or not. It is not going to change that most of the traders are wrong. Those who are often doing retail trading are incurring losses.
Now, what we need to understand from sentiment is that if most people are on the buying side, it is not 100% confirmed. As discussed earlier in trading, there are very high chances that the price will go down. If the price is to go up, then most probably the chances are that the price will go up.
So traders are wrong. Price action does not always tell the whole story. Price action can also be misleading, but to filter it out, we use sentiment analysis along with it. Sentiment analysis tells us about traders' psychology, their mindset, and shows us how to go against it, what they are thinking, and most probably what their action will be if the price does this. So we have to go against them. Retail traders alone do not matter, but when they gather, yes, it can also become a market. So we need to read extreme sentiment. We cannot use the standard room sentiment to use that sentiment. We can use it as an indicator. Now, for example, in front of you, at this time, we have buyers for Euro USD. 40% are sellers, 60% in this example.
What does it mean if most people are selling? It means Euro USD is going to rise. Similarly, if 60% were buying, what would it mean? Euro USD is going to fall. Because of this, and we understand this point, we have to trade by understanding the market sentiment. Now, what do we have to do in trading? We have to combine all three analyses. Now, what is the best analysis? Everyone will express their points and views. Everyone will justify their own side, but we need to understand that using all three together is essential. Why? Technical analysis shows chart movements. Fundamental analysis tells about economics, the health of the country. Sentiment gives you a guess that the market is badly. You have to combine everything, and if we don't combine things, our trading won't have stability. If we lean on one analysis, it can backfire a lot, and if it backfires, we can suffer a lot of loss. It is essential to understand that we have to carry fundamental, technical, and sentiment together.